Very good afternoon to all our viewers. You have tuned into Buy Now Sell Now on ET Now. I'm Shrishti Sharma and with me as always is Cheryl D'Souza. And viewers, this is your show where you get all your stock related queries answered by the experts. So do get ready for that. But let's have a look at what the markets are up to. So Cheryl, in the similar show just a couple of days back, Kunal was referring to the short covering rally. And today it seems like the rally is just getting stronger day by day.
Absolutely, Shrishti, and actually it's good morning and not good afternoon. I know
you're
hoping that we end the day on such a high note for the markets. But yes, it's a great Friday, looks like it for the benchmark indices as we speak. 1.5% uptick, actually 1.3% uptick coming in for the benchmark indices near the day's highest point. Nifty Bank, that's the one that's outperforming the benchmark indices. 2% uptick coming in for Nifty Bank as we speak. If you take a look at the Nifty screen, the list of the 50 stocks on the Nifty index, you have only 6 of them that are in the negative territory as we speak, and mostly are actually from the consumer pack or the pharma pack. But on the gaining side, you have Adani Enterprises ruling the chart. 10% uptick coming in for Adani Enterprises. Adani Post is trading higher by about 6.5%. You have SBI holding good gains of about 4% or so. NTPC, Power Grid are the other counters that are gaining on the Nifty. And like I said, it looks like a very good Friday for us, hoping that we actually end on such a high footing, or in fact much higher than where we are right now. And if you look at the sectoral indices, all the sectoral indices are gaining in trade. The only one that's gaining the least amount is Nifty Pharma Index, likely so because you have Divi's Laboratories and Cipla that are in the negative territory among the top Nifty losers today. But on the flip side, you have PSU Bank Index that's holding on to gains about 4%. Power Index also seeing good gains. Metal Index 1.8% uptick in today's trading session. But one cannot take the eyes off the Adani group of stocks, Shrishti, in today's trading session. You have all of them, all the 10 stocks actually posting gains today. But let's hear out Nikunj Dalmia, who is the managing editor of ET Now and ET Now Swadesh, on his take on Adani's mega block deal of around 15,500 crore rupees, which they've raised from US-based GQG Partners.
Let's first introduce the investor. Sure. Who is this fund? It's a marquee fund run by Rajiv Jain. He's an old India hand. In his previous avatar, he was managing money for Wantable, and that time also understanding and his faith in India, I think, was absolutely remarkable. So there is an old India hand which has checked into Adani group of stocks, and it's a sizable commitment of 15,000 crore by a single fund into a group where normally global institutional investors have really shied away. So in the glory days also, you did not have such large marquee funds into the Adani group of stocks. And here's a guy who comes in and checks in 15,000 crore, one single shot in 4 or 5 Adani group of companies. That is just some kind of an endorsement coming from a very smart marquee fund manager that he is truly finding value or feels that the worst is behind. I was reading his comments earlier on various other publications, and that time his view was that the Adani group of companies have a lot of debt, and that was the reason why he did not participate in them. But I guess there is value which clearly seems to be there. So I think in terms of the profile of the investor who's checked in, and the name who's checked in, and the kind of commitment what we have, I mean, we've had several interactions with him on ET Now in his previous avatar. So you pretty much know that his understanding of India is very deep. And there's something I learned from Rajiv a couple of years ago. He said, I never waste a crisis. So is this the crisis where he is not wasting it in buying into Adani group of stocks? So that's part A of the story. Let's discuss part B now. Now part B of the story, I think, is the understanding one, is the important one. What it means for Adani group of stocks, what it means for Adani group, and what it means for markets. The money in this case, I'm just going to break it for our viewers, it comes at the promoter level. So 15,000 crore plus suddenly comes into the promoter kitty. Now if the promoter has got 15,000 crore, what it will do? Well, obviously you would like to repay your personal debt obligations. That could be loans against shares, or where you've raised capital, or where you've raised debt. That's at the personal balance sheet. B, that also means that from a market standpoint, not that there was a default risk in any of the Adani group of stocks in terms of the debt repayment. They have really paid their debt. That fear, in a sense, now gets arrested because promoters are flushed with cash. Third, from a sentimental rub-off standpoint, when the Adani saga broke out, lenders, they suffered. Now this also is not going to be, this also is going to be having a rub-off effect on the lenders and especially PSU banks which have a large exposure to Adani group of companies. Bear in mind the money does not come, Anisha and Avan, into the balance sheet of the into the balance sheet of the companies. This is coming at a promoter level. So this is not like Adani FPO where the money would have come into Adani Enterprises. The money in this case is clearly coming at promoter level where they would be able to repay their debt obligations. Look, the money will come back into the system. How and how it would be done, we don't know.
Okay, so that was the editor's take on Adani Group of shares, and not just the Adani Group of shares, even the banking names are reacting exactly as per that. But it's Friday, viewers, and it's a learning day for all of us. As you know that we are going to be telling you and showing you today's Buy Now, Sell Now Pathshala. So let's quickly get across to our analyst, Kunal Bothra is joining us live into the studios. Kunal, over to you. Which interesting topic is for the Buy Now, Sell Now Pathshala today?
Good morning, Srishti, Cheryl and everyone. Today's topic is rising three methods. Now, just to put it into very simple context, we say one step back, two steps forward is a way in which progress can be made. But what if there is a three small step and one big step which is forward? That's the kind of a breakout which we look out for in terms of charts. It tells you that the resting period for the stock is over and the stock is getting ready for a breakout. Now, this is a very simple denomination of what the rising three method is all about. By the term rising three actually means three falling candlesticks. So the stock goes into an upward trend. There is a, the three rising method indicates that there is a phase of a pause where the stock takes a bit of a rest. We call it as mean reversion in technical terms. And then all of a sudden the stock gets into a second level of a breakout. So this is a classical pattern which gets formed for stock price. It helps us into decipher which are the kind of stocks which are breaking out, completed the mean reversion. The risk reward to buy the stocks at current levels is extremely attractive, and when you expect a breakout, the risk reward, the trend continues quite significantly for stock prices. So we look out for a couple of examples over here. One of them was very recent charts for Dixon Tech, where the stock already entered into a very strong multi-month, multi-week uptrend, then got into a 2 or 3 weeks of pause for itself, and then there was a strong continuation move. And this was such a powerful move that from just a matter of 2,500, 600 zone, which is this major support, the stock climbed up to as much as 4,000 plus levels in just a matter of 2 or 3 weeks. So that's the powerful denomination of this rising three methods. Now, one of the charts which is forming such a similar kind of a pattern is M&M Finance, and this is more on the weekly charts. Again, as you can see that the previous 2 weeks for Mahindra and Mahindra Finance was onto a very strong uptrend where the stock recovered from 222 to almost 270. The last 3 weeks is where the stock has gone to a consolidation, and as you can see historically that from December end the stock has been consolidating. So this could be a very strong classical point where the rising three methods can come back again, and if the stock makes a strong comeback, the risk reward to initiate a buy is almost 1:4, 1:5. So traders could look out for this kind of a very strong candlestick formation which gives a very strong risk reward as well as a first hand in a new uptrend which begins into stock prices.
All right, so that's something new that you've learned in BNSN Pathshala with Kunal Bothra. That's rising three method. But on that note, we slip into a break on this edition of Buy Now, Sell Now. When we come back, we will start taking all of your queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, and this is the show where we get you answers for all of your stock-related queries. You can write to us on YouTube, Facebook, as well as Twitter. We are live on those social media platforms, as well as you can connect to us on the WhatsApp number that will be flashing on the top of your screen very shortly. Do mention your name, the location that you're writing to us from. Also, do mention the stock that you're looking to invest in. If you've already invested, then let us know the buy price as well as the quantity and the time horizon that you're looking to hold a particular counter. That will help our experts help you better. But before we kickstart with the queries, let me bring on board our experts for today. We have Kunal Bothra as well as Mr. Avinash Gorakhshekar joining us on the show. A very good morning to you, Kunal, as well as Avinash. Thank you so much for joining us on ET Now. And Avinash, before I kickstart with all the queries, let me ask you, what should retail investors do in such a market scenario to make sure that their wealth is protected, given the fact that we are seeing a very strong rally at least this Friday?
Yeah, I think good morning, Cheryl. First of all, today is a green day. We have seen the index, shooting up quite significantly. As my earlier, viewpoint on your channel was that, investors should adopt a slow SIP strategy. I think look out good companies, especially from the large cap space, both the NSE as well as the BSE stocks, and try to accumulate quality businesses on market declines. I think SIP is definitely a good idea, but obviously not when the market is touching new highs. So I think you need to time your SIPs also in a very normal steady kind of market, and continue this process for the next say 4 to 5 years. I think longer term investments and long term wealth creation happens when you do this consistently and with a little amount of discipline. So I think one has to keep on investing regularly. That is most important, and start investing from an early age. So that is how SIP actually generates a decent alpha and a very good kind of wealth generation for investors. So that would be my message to investors: keep on investing, but keep a time frame of at least 4 to 5 years, and use the market dips to accumulate stocks in a regular, disciplined way.
Yes, so try to time your SIPs as well as look out for good companies, and we'll also try to get good names from the experts during the course of the show. But let's move on and kickstart taking all your stock related queries. And the first question that I have is coming from Ansar, and Avinash, coming to you for this one. He invested in Kaplan Point. He's holding 50 shares near about the current market price of 675 rupees, but he's looking to hold on for the long term. So what are your views? Can he hold on to this counter, and what should be the return expectation?
No, I think, see, this is a company which primarily is an exporting pharma company, largely to the Latin American and African markets. And I think the company has some unique molecules. The company has been recording decent growth in the last, say, 2 to 3 years. Our sense is that, I think if the investor can keep a time frame of at least another 12, 18 months, then whatever initiatives the company has taken in the past, especially in the last 6, 8 months, I would believe that would definitely fruitfully result in a good upside for the stock. The business also is expected to grow quite significantly over the next say 1 or 2 years. So I think here some consolidation can be expected in the near term, but from a medium to long term view, especially 12 to 18 months, I think one should hold on. I think one can easily expect a decent return of at least 15 to 20% on a very conservative side. Definitely, if the earnings are much better than expectations, the stock could get re-rated further.
This one is coming from Arvind, and Kunal, this one is for you. He's saying he's bought Macrotech Developers at a price of around 880 rupees per share. He wants to know at what price range should he look to book profits in Macrotech. He's only planning to hold this counter for just this month.
So I think at current levels are good levels where you can look to book out profits for Macrotech, because the stock has come back towards a 200-day moving average. So a major mean reversion seems to be completed for the stock. The indicators which are extremely oversold, they've come back to territories which is above neutral for Macrotech. So when you have such kind of a steep rise from 720 to now 1020 odd levels in just a matter of 3 or 4 days, it's bound to be that the stock would get back into a correction. And if the correction, whenever the correction starts off, it could be a bit more sharper for Macrotech. So I think it's a good time where you should look to book out profits.
Okay, Avinash, once again coming to you, Samrat is holding 209 shares of IRCTC from a price of 657. So currently at a loss, but what's your medium to long-term outlook on this one?
Yeah, I think IRCT is a regulated monopoly, Shrishti, and I think if you give a 2 to 3 years kind of time frame, the kind of traffic movement which we have seen in the railway, passenger traffic, I think is definitely poised to grow significantly. More importantly, they have internet ticketing, which is a very strong, profitable vertical where EBITDA margins range between 50 to 60%. So I think IRCT is now using the excess cash to build into some new projects like affordable kind of hotels. They're also trying to build in a lot of further improvements to their passenger car trains. So I would believe that the investor needs to take a 2 year view at least. In fact, I would not be surprised that looking at the fact that this business is cash generating, the balance sheet is pretty low on debt, a very high ROC and return on equity. I think the investor can hope to make a good return provided he remains invested here for the next 2 years. So I think in the near term, of course, the stock will remain a little volatile and may underperform. But over the next 2 years, if the investor holds, I think he should make a decent amount of money. So my advice would be to hold on.
Okay, Kunal, another one coming your way, and this one is from Sudin, and he wants to buy Maruti as well as M&M from the Auto Pack. But he wants to know at what level should he look to start buying these counters, and his time horizon is just 1 to 2 years.
So I would suggest M&M as a better bet, at least as of now. Maruti, maybe if the stock crosses back about the 9,000 mark, then the prospects can improve for the stock price. But I think M&M has corrected quite smartly towards its 200 DMA. On the hourly charts, the stock is showing signs of divergence, which means possibly in the next couple of days, the stock could form a major bottom for itself. So I think on the back of this, I would probably prefer M&M as a preferred bet as of now. And if Maruti, and whenever Maruti crosses back about that 9,000 levels, which could be 300, 400 points higher from current zone, that could be a point where you may look to enter the stock.
Okay, Avinash, once again coming to you. Samrat, beg my pardon, please. Prashant is holding 1,000 shares of Exide Industries, Exide Batteries, from a price of 180 rupees, but he wants to know the outlook for the next 2 years.
Exide is a dominant player in the automotive battery space. In fact, it's an oligopoly market with Amara Raja and Exide, the only two largest listed players. I think with the kind of growth in the automotive sector, especially the passenger car, two-wheeler, and the commercial vehicle sector, I think Exide is well positioned in the OEM segment as well as in the replacement market. Most importantly, Exide is now looking very aggressively in getting into electric lithium batteries, and for which they've already started making investments. So I would believe that this is a stock which is definitely poised to do well over the next say couple of years. So I think in the very near term, prices could remain slightly range bound considering the rise in lithium as well as lead prices. But considering the fact that these metals have also corrected from their peak levels, possibly I think margins could improve going forward with the volume growth kicking in. So I think keep a time frame of 12 to 18 months and continue to hold. I would not be surprised that FY24 could be a very strong year, considering the fact that the market is now looking at very strong top business growth from all the vehicle segments, especially the commercial vehicle, the two-wheeler, and recently most of the two-wheeler companies have started generating double-digit volume growth numbers, which actually bodes well for Exide.
Okay, this one is from Dhananjay and he wants a technical view on the whole FMCG sector. As all stocks are beaten down and not showing any revival sign, he wants to know which is one good stock in that particular space that he can look to bet for the next 1 year, Kunal.
So difficult to just pinpoint one stock, but yes, the entire FMCG sector has been beaten down. But then I think the best part about these stocks is that whenever these stocks get into a oversold territory or an underperforming zone, that's the classical time to buy these stocks if you're a long-term investor and if you're okay holding such kind of low to moderate beta kind of names and going with very steady kind of CAGR returns from a longer term perspective. So I think purely on that sense, I would probably prefer Nestle as well as HUL. I think that stock, both these stocks have corrected quite aptly towards their long-term averages. I think some of these stocks have also now crossed below the 200-day moving average for themselves. So it's a good time where you may look to start chipping in purely for a longer-term investor.
Okay, Avinash, this one is for you. Suresh wants to know, is this a right time to enter into Carborundum Universal if we see the stock has already been a multi-bagger in trading near its all-time high levels? Your views?
See, I think Carborundum is one of the leading players in the abrasive space. And in fact, they have started now working on many products, even for the electric vertical, business segment. My sense is, this is a stock where one has to take at least a 2 to 3 year kind of time frame, considering the fact that the stock has significantly outperformed. Our sense is that in the very near term, the stock could remain range bound. But if somebody were to buy the stock at the current levels, then keeping an investment time frame of at least next to 2 to 3 years is very important. The business is growing. The management, headed by the Murugappa family, is extremely, professional, and where corporate governance is perfectly, very strong. So I would believe that any dips should be used to buy the stock to build positions in any portfolio, but keep a time frame of at least 2 to 3 years.
From Raj, and Raj wants to know if there's any stock recommendation to buy from in the air conditioning space. I will take this one to you, Avinash, because I have not asked you a query at all. And this one is coming from Raj. He wants to know which is that one stock that stands out in the air conditioning space. Also, how does the outlook for that particular counter look to you?
I think most of the companies which operate in the air conditioning space, Cheryl, have actually gone up significantly, and that is the reason one has to be a little patient here. But I think stocks like Havells looks pretty interesting. You got Voltas also, so Havells would be a better choice. And I think if the investor is looking at the broader cooling market space, then even Symphony at the current levels looks attractive. Keep a time frame of at least 12 to 15 months, because looking at the peak summer this time, expectations are that the volume growth in this summer season could be significantly better for all these companies. So I think Symphony and Havells could be good choices, provided the time frame is at least 12 to 18 months.
Okay, so that's the view coming in from Avinash. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back. And experts also, please hang on.
That was actually the only time I applied for a job. Thereafter, I either worked at a startup company that I founded or I was recruited. The most famous of these startups, as was mentioned, of course, is Tesla, where I was the founder and the original CEO. Today, I'd like to share a few lessons that I've learned over my years as an entrepreneur. Hopefully, you'll find some of these lessons to be relevant here in Andhra Pradesh, particularly to those of you involved in startup companies, either as entrepreneurs or as investors. My first startup company developed high-resolution graphics terminals, something that was technically interesting but not particularly relevant. My next startup company was the first company making ebooks. This was also interesting, but otherwise not relevant. It was my third startup company that started a revolution. It seems unimaginable now, but in year 2000, when I started thinking about Tesla, nobody in the world was making electric cars. No established car companies, no startup companies, and most people didn't think electric cars were even possible. Tesla proves them wrong and showed that the future of automobiles is absolutely electric. Today, every legacy car company in the world knows that their future is with electric cars, and there is a rich ecosystem of EV startup companies around the world. The real problem that I saw in 2002 was climate change caused by fossil fuel consumption. I did not start out assuming that electric cars were the answer. Rather, I came to this conclusion by researching the well-to-wheel energy efficiency and carbon footprint of every kind of propulsion system I could find. Everything from petrol, diesel, hydrogen, natural gas, propane, electricity, and more. Somewhat to my surprise, the math proved that electric vehicles were by far the best choice. This was the beginning of Tesla. Starting a car company in 2002 was absolutely crazy. No new car company had ever succeeded in my lifetime. Because it was such a crazy idea, it was at first impossible to hire anyone with automotive experience. And so we started off with just beginners, people who had never done electric cars in their life. I think if I had known how difficult it was to start an electric car company, I might not have done it. But I think that my own naivety and the naivety of my founding team was necessary for us to be so bold as to start a new car company based on a new technology. We had to learn about automotive safety standards and crash testing. We had to learn about automotive suppliers, learning that suppliers generally were not interested in supplying to a small startup company in California. We had to discover the inherent safety issues with lithium-ion batteries and learn how to solve them. We had to figure out how to manufacture, deliver, and service cars. There were so many difficult problems that had to be solved, and had to be solved on a tight budget. However important naivety may be for starting a company, it is just as important to face your problems and get over them. In a startup company, it's also easy to be hyper-focused on the product you're building, solving the technical problems that are in front of you. It is easy to forget that you're also building something else, that you're building a company, and the early people that you hire, the way you interact with your team, the policies that you put in place, all of these create the company and will define it for the near future. In 2002, the idea of climate change was caused by humans and was still debatable. Today, 21 years later, this is a settled question. Climate change is real, it is an existential problem, and we are the primary cause of climate change. Do I think that replacing all of our cars with electric cars will solve this problem? No, of course not. But it is a start. The EV revolution was the best that I could do at the time with the resources that I had. We have a long way to go, and it was the best I could do. We all have a long way to go, and we need all of us to be focused on learning how to live in this world sustainably very soon. I am hopeful that this is the beginning of a green revolution that will get us there, not a greenwashing wave that will get us nowhere. And so here are a few of the lessons that I bring to this Andhra Pradesh Global Investors Summit. Do something that's really worthwhile and solve real problems in this world. Be bold, try something new, but face your problems when they arrive, and build great companies as you build great products. Thank you very much.
Thank you, Mr. Eberhard, for your wonderful words. Now it's an honor to welcome the Chairman of Jindal Steel and Power Limited, Shri Naveen Jindal ji, for his address. Welcome, sir.
Okay, so you were listening to the panelist at the Andhra Pradesh Investor Summit, but let's move on and take all your stock-related queries onto the show. And Kunal, coming to you for the next one. The question is from Vidya, and she is holding shares of Thermax from an average price of 2,030 rupees. She's a short-term trader and sitting at a good profits now. So your advice, book profits or hold on?
I think you should look to hold on. Don't see any reason why you should be looking to booking out profits. Yes, the stock has done reasonably well, and it's come out of a multi-month consolidation. So the recent breakout for Thermax was just about the 2,100 mark. It's almost 4-5% higher from those levels. So I think you can probably keep a trailing stop loss, or you may look to hold on for further upside.
Okay, Avinash, this one is from Rajagopalan, and Rajagopalan has bought Hikal or Haikal, or half of us call it, at a price of around 366 rupees per share. He wants to know what's the prospect for this one over the longer term, and is it good to hold on for the next 2 to 3 years?
See, I think in the very near term, Cheryl, Heikel is expected to face a lot of headwinds because the entire agrochemical space has seen a demand compression. In fact, not only Heikel, but all the other prominent agrochemical companies have done badly, considering that demand has gone down, the input prices have gone up, and that has resulted in a significant margin erosion for most of the players. So, in the next 1 or 2 quarters, we could see these challenges continue. But longer term, definitely agrochemicals has a very strong future ahead, and Heikel has a very strong portfolio, so they should definitely do well. They're also into the contract manufacturing business, so that should also help them. They have a combination of pharma and agro. So if the investor has a 12 to 18 month kind of time frame, then only he should hold on. In the short term, I don't see any major trigger, but yes, in the longer term, there could be good value which would be made from the current levels.
Kunal, coming to you, Padma Sivrao from Bangalore wants to know, is Indigo Paints in an oversold zone right now, and can he buy at current market price?
Yeah, it's into an oversold territory as of now. I think the weekly charts as well as the daily charts have come back into an oversold territory. But then it's very difficult to categorize that when would the bounce happen for these stocks, because a stock can remain oversold for a prolonged period of time and can keep on correcting before you see a meaningful rally or a bounce in place. So it's always better that you wait out for the first phase of a bounce where the stock at least breaks past about the previous or the nearest swing high. So that would be a point where you may call in for a reversal. So you can just keep it on the radar that the stock is oversold, and whenever there is a meaningful bounce, that's the time to chip in.
Okay, this one is from Tripta Alwalia, Kunal. Greece Cotton 500 shares at the price of around 200 rupees per share. She's saying that she's suffering 36% loss. What should her strategy be now?
I think we need to hold on. As of now, the stock has retested the previous support of 125. This was seen in the month of December and Jan start for Greaves Cotton, and I think at 125 levels, you can continue to hold on to the stock price. The indicators are making a comeback, so I think that's the positive sign for Greaves Cotton. I believe sooner or later the stock should come back towards 140, 145 at least.